You filed your extension back in April, and now you can breathe a big sigh of relief. Good. You should have if you didn't have a complete return. But here's the thing no one probably warned you about. Filing that extension didn't give you as much time as you think, because October is a hard stop. No more extensions, no more runways. If you're sitting right now thinking, oh, I have months, then this video is specifically for you. Just stay with me, because the next 5 steps I'm about to walk you through could save you hundreds, maybe even thousands in penalties and interest. If we haven't met yet, my name is Nixon. I am an AFSP tax analyst here in Houston, Texas. And this is the Tea on Taxes, where I give you the tea on all things to do with your taxes. First, let's get one myth right off the table. When you filed your extension back in April, you extended your time to file. You did not extend your time to pay your taxes. You see, the IRS still expects you to go ahead and estimate what you would owe and pay that back in April 15th. So if you owe taxes, or you even think you might owe taxes and you haven't paid them yet, well, guess what? Interest has been accruing on that balance since April 15th. Right now, as you're watching this video. Now, the current IRS rate for underpayment of your taxes is calculated quarterly. And what it is it's tied to the federal funds rate plus 3%. Don't worry if you don't know what that is. But basically, in recent years, that's been anywhere between like 7 to 8% annually. Now, that doesn't sound catastrophic until you combine it with your failure to pay penalty, which is about 0.5% of your unpaid taxes for every month that you are late. So if you owe $5,000 and you haven't paid a dime since April, you're already looking at extra costs that are adding up fast. But I'm not telling this to scare you. I'm telling you this because understanding what is at stake typically is what makes people take action. And taking action is exactly what you're going to do today. So step 1, and this is the foundation everything else is built on, and that is getting your books organized, clean and organized. You want to get them current. And I mean, I can't tell you how many people will come into me in September after they filed an extension, and that's with the shoebox. And they'll, whether that be literal or digital, we're talking about a shoebox of receipts and bank statements, and none of it's recorded, not even categorized. And here's the problem. You can't accurately estimate what you owe, and you can't file an accurate return if you don't know what your actual income and your actual expenses are. So let's go ahead and use the current year as an example of what your clean book should look like at this point in year. So right now, at this point in the year, the number one thing you're going to do is every bank account and credit card transaction from January to today should already be categorized. Income is income, expenses are all in the right buckets. And then number 2, your business mileage log should be current. And that's one that gets really messy fast, because if you're deducting vehicle expenses in addition to mileage, that log is non-negotiable. And number 3, any home office equipment, subscriptions, any deductible expenses. Now, they are all recorded and they have a receipt and an invoice all attached to it. Once your books are clean, then you're going to run something what they call a profit and loss report. And you can do this through QuickBooks or whatever financial software you have. And you're going to do it for a full year up until today. And what that report is going to do, it's going to be the foundation for your next step, which is step 2. Pro tip, if your books are that badly behind, don't try to fix everything yourself in a panic. That's what professionals like me are here for. But more on that we'll talk about later. Step 2, and this is what will stop penalties right in their tracks. And that is making an estimated payment right now. Not tomorrow, not next week, today. So here's the simple logic. You know approximately what you've earned this year already. And you also know a little estimate about what your deductible expenses are. So you're just going to go ahead and subtract one from the other, and that is your net profit. If you're self-employed, you will owe roughly 25 to 30% of that net profit in federal taxes. And that includes the self-employment tax, which is about 15.3% on its own, plus your income tax bracket on top of that. Now, don't let the math paralyze you. You don't need the exact number. What you need is a reasonable good faith estimate, because what the IRS has is what they call a safe harbor rule that says if you pay 100% of what you owed last year or 90% of what you are going to owe this year, then you can avoid those underpayment penalties. So let's go back now to the extension that you filed for last year, since that's what this video is about. Okay, what you're going to want to do is you're going to pull up your prior year's tax return. So right now we just finished 2025. So you're going to look at 2024's tax return. And you're going to go ahead and look at the total tax liability, which is around line 24 if you filed a 1040. Now, if you pay that amount or close to it before October 15th, then you're in that safe harbor territory to go ahead and prevent underpayment penalties. So what you will do then is you're going to go now to the irs.gov using direct pay, using their direct pay portal. And it's free, it's fast, it's totally secure. And I'll also link it down in the description so that way you don't have to go fumbling and worry about Googling it wrong. What I want you to do is go ahead and now make a payment right now. Okay. Then I want you to screenshot that confirmation, because that screenshot of that payment is gold. And then step 3, and this one is the one people always procrastinate on, and that's tracking down every piece of documentation that you're still missing. Now, there's 3 documents I see missing the most often for people who are filing extensions. The first one being 1099s. Now, if you're a freelancer or a small business owner, and every client who paid you $600 or more should have issued you a 1099 NEC. If you don't have it, or if you're missing it, you can't find it, you will need to contact that client directly and ask for a copy. If they didn't do it, that's fine. You can just log it in your accounting software and just verify that income manually with your bank account and everything. All right. The second one is K1s. And if you are a partner in business, a beneficiary of a trust or an S Corp shareholder, you are getting a scheduled K1. There's no qualms about that. I mean, but the thing is that these are notoriously always late. But yeah, chase them down now because you're going to need them, especially in October. Third and last thing is receipts for any major deductions. So if you are deducting like your home office expenses, equipment, personal development, like I know mine sometimes will be in like thousands. If you don't have a receipt, you need to find it, okay? So check your email, your bank statements, your Amazon order history. I mean, most digital receipts are recoverable. Pro tip, the IRS does not care that you forgot or lost it. Having the documentation to support every deduction is your responsibility. And it's going to be what protects you in an audit, to be quite honest. Now, I want to talk about one of the single biggest mistakes I see extension filers make every single year. They wait until October 14th to open their books. I wish I was exaggerating, but here's what that looks like in practice. It's October 14th. You open your bookkeeping software, or worse, your bank statements. It's the first time since April. And guess what? Your books are still a mess. You've got uncategorized transactions, you're missing receipts, a 1099 you never tracked down, and you have this K1 that is still sitting on your desk unopened since June. Now, you're in full panic mode. You're calling your CPA at 9 p.m. They're either not answering, or they're going to ask you for a buttload of money to go ahead and do what they call emergency rush fees. Because guess what? You're not the only one who waited until October 14th. But what if you can't get everything together by October 15th and you miss the October 15th deadline entirely? At that point, you're looking at a failure to file penalty that reverts back all the way to April, even though you filed an extension. And you're also looking at a failure to pay penalty. And that's on top of the interest that has been running since April as well. Now, the failure to file penalty alone is 5% per month of your unpaid taxes. But it's capped at 25%. So that is what you're looking at. Don't be that person. You're watching this video early enough to go ahead and avoid all of that. Take advantage of it. Okay, so let's bring this all together, okay? I know I loaded a ton on you. So here's the 5 steps starting today. Step 1, you're going to go ahead and get your books clean. Every transaction is going to be categorized. Every expense is going to be documented. Then step 2, you are going to calculate your estimated tax liability, not only for last year, but also for the current year. So you're not going to be late again. And you're going to make those payments directly through IRS Direct Pay. You're going to do this today, not tomorrow. The next thing is step 3. You're going to track down every missing tax document, your 1099s, the K1s, the receipts. Don't assume they will show up on their own. These things don't have legs. Step 4, you're going to avoid that number 1 mistake, right? You're not going to wait till October 14th. You're starting this week. And step 5, if your books are behind and you're not sure if you can do this alone, get help early enough that it will actually help you and also not cost you a buttload in emergency fees. Speaking of getting help early, if you're a small business owner or a freelancer and your books are not where you need to be by October 15th, I do want to go ahead and help you get there. I work one-on-one with clients, both in person and virtually, to get their books cleaned up and their documents ordered and their return filed accurately, all without that last-minute panic. If you would like to do that, there is a link to book a consultation in the description below. Now, spots are limited as October gets closer, so don't wait until they are all gone. And if this helped you today, please hit that like button because it will help more people find this if they need it. And be sure to subscribe so you don't miss the next Tea on Taxes episode. I like to make these videos about every week, usually on Tuesdays, for small business owners who want to stay ahead of their taxes and not behind it. Until then, keep on sipping. Bye.